TSYY looks like the dream trade. Income tied to Tesla, big payouts, monthly cash flow that makes people stop scrolling. But here's the problem. Income can feel amazing while quietly doing damage underneath. So today we're not guessing. We're not reacting to one good month. I'm doing what most investors never do. I'm going all in on TSYY and backtesting it from day one. We're going to look at what the income actually paid, what happened to the share value, how different drip choices change the outcome, and most importantly, what an investor really ends up with. Because high yield doesn't automatically mean high returns, and the math always wins. Let's pull up the data and see what TSYY actually delivered, so stay tuned. Welcome back to Simply Money. Today we are looking at TSYY. We're doing our all-in scenario. The what if we had put our entire income portfolio into TSYY, how would it have fared? How would we look right now? What would our balance be? What kind of income would we generate? We're going to look at full drip, 50% drip, and zero drip, and then some alternative ways to take withdrawals and see how that performs. If you've been here before, thank you for coming back. For those that are new, I want to make sure you understand the process and know that this is not financial advice. This is for information and educational purposes only. Please make sure you do your own due diligence. I am not telling anyone to go all in on TSYY or any fund. In fact, I highly discourage being all in on anything. Diversification to me is a key strategy in performance. And so we will go from there. What we do is we go from Inception, which was December 31st, 2024. We have our share price here in column B, starting out at $24.17. I have it here as a weekly payer. It started out paying its distributions monthly, but as of, I believe it was June, let's look here, as of June 17th, it started paying weekly. You'll see that dropping because your payments are coming weekly instead of monthly. With our $525,000 scenario, that would get you 21,721 shares. So let's look at what happens. We'll go down the column here. You have your dates in column A. If you like these sheets and you'd like to get one to play with TSYY and some numbers, you can change the date that you start. You can change the amount that you invest. And we'll look at some other things you can change over here at the end of the video. But you can get a copy of this down at the Buy Me a Coffee. The link is in the description down below. So thank you for those who have supported the channel. I appreciate that. And the best way you can support the channel is hit that like and subscribe button and share it with others on your social media. That always helps the logarithm gods. So here we go. Looking down at date by share price, you can see that the stock price has just plummeted. And for me, this is a little bit concerning, not only because a lot of these high yielding dividends distributions, the NAV will go down and you can make up for it by reinvesting a certain portion of that back into it. But what's really concerning is how drastically TSYY has dropped, considering that its underlying Tesla has actually had a decent year. It was up 17%, I believe it was, this 1 year return during this time frame. This is dropping really fast, even in a market where the underlying is growing. So that is something I would want to look at and consider. And this fund here, I'm just going to be honest with you straight up at the beginning, this one here really concerns me. There's some funds that I see the NAV decay. It doesn't bother me because the distributions are more than making up for it. And if you properly reinvest a portion of that, you're not only either maintaining or growing your balance, but you're also getting a healthy income. Here you're getting a gigantic income, but you're paying a big price for it. We'll just scroll down here. You can see that ending as of the beginning of February, when we're looking at this, we're down to $4.70. That means a reverse split is about to come, which is fine. Reverse splits in these is not necessarily a bad thing. It's more of a bookkeeping thing that they have to do just to keep those share prices up. But when you're having that much drop and your distribution's not compensating for it, that's when the problem becomes a concern. Well, let's look at our column C now, the distribution amounts. You can see here In January of 2025, it was 74 cents. March, they paid a phenomenal $2.54. But look over here, you went from $22 in February and got 74 cents. You dropped almost $7 down to $15, and you got a $2.54 distribution. So you're still $5 lower than the distribution. If you had a $1.50 drop and you got the $2.50 distribution, that'd be fantastic because you're actually getting more and it feeds into your total return, which is all that really matters. It doesn't matter what your distribution is if it is less than the NAV drop, and it does that consistently. You may have that periodically, and that's part of the process, but if it's consistently doing that month over month, and for this an entire year, it can become a huge problem. Let's just scroll down. You can see as we went into the weekly, it went down to paying 30 cents, 29 cents. It's just slowly been declining along with the share price. But let's just look. So we had a $8.58 down to $8.40. So that's an 18-cent drop, and we got a 22-cent distribution. So that's actually okay because you're getting more. You can reinvest some, and it'll help your total growth. But most of the time, you can see that the distribution is much less than the NAV drop. And there's only a couple occasions in here in this entire year, again, even though Tesla was going up, that you have a positive incline where the NAV actually goes up. You can see here from $7.99 up to $8.11, up to $8.48, but then it starts dropping again. And now, like I said, we're down to $4.70 with just under 14-cent distribution. How does that work out? When we look at this share price, it has dropped 80%. And this is just over a year. We're looking at about 14 months here. It has dropped 80%. That is just tragic. But we have to look and see if the distribution has made up for that. Because if you look at the channel, you can check out the playlist up above, the all-in scenarios. We have some funds that have had this type of drop, but their distributions have more than made up for it, and we have a positive correlation. So check out some of those videos, see some of the funds on there, and see how different funds perform. Now with this, what we're looking at is our full drip, column D. If we take the distribution, whatever it is, and we just buy more shares, and that is over here in column G. So the share total with a full drip, as you can see, the first payment, we're just kind of a wash because of when we started, $1,000 for the month of December. So you got a few more shares here. But then we go into January, February, March. Look at this, a $16,000, $16,000, $58,000 payment, $41,000 payment, $42,000 payment. As you buy more shares and that share price is dropping, so you're buying a boatload of shares during this time frame. But then it just kind of settles down because you get into your weekly, but now you're getting this on a week-to-week basis, so you're buying shares more frequently. So every week you're getting $10,000 here for this first month, and then it goes down to $9,000. And it's gone up at the end here. We're up to about $11,000, $12,000 in the end of last year because you're gaining so many more shares, and even though the share price is dropping, you're getting that share quantity, and your distributions have pretty much maintained. So over this time frame, doing a full drip, you've gotten $538,000 of distributions that you've reinvested. You've gained 62,000, almost 63,000 shares. But here's the problem. Look at column I. This is you're reinvesting. You have all these shares, but your share price is dropping so fast, your portfolio balance is down drastically. You can see it's in the red, and it stays in the red. And at the end of this time frame, we're down $127,000, or a negative 24%. So even with full drip, we're negative 24%. Now, if you've watched the channel, you've seen other funds that have done this, but then with the zero drip, they've actually been positive because you're getting that cash flow. And if you're peeking to the right there, you see that's not the case with TSYY. And that's where this becomes very concerning. Now we'll look at the 50% drip. Same thing. You're getting the distribution. This row here represents half of the amount you're getting because you get this amount twice. So we're showing you how much is being reinvested, but you also get the same amount as cash. And column H is showing you the accumulation. So this amount here is being invested and you're getting more shares. And as we come down here at the end, you can see you've received we'll just call it $200,000 in distributions, and you've reinvested that. So you've gained 21,000 shares, but you've also received $200,000 of income. That's pretty healthy. I'd be happy with that portion of it in just over a year, getting $200,000 of income while reinvesting 50%. But again, look at our value. As we've been reinvesting half of it, we hit the red very quickly, and we have just plummeted and stayed in the red, and we're down 61% in that year. Your portfolio balance would be down to $203,000. Sure, you've received $200,000, but you're still down negative, and we'll look at the total returns of all of these in a second. Real quick, let's look at the zero drip. Okay, in this scenario, we're taking the cash. Maybe we're using it for living expenses. Maybe we're reinvesting it elsewhere. But as you can see, the distributions begin to get smaller and smaller because you're not adding shares. As you look down this column F here, you can see at the end, we're getting, it's still a healthy distribution, don't get me wrong. For the last 4 weeks, you've gotten $3,000 a week. $12,000 a month is a healthy distribution, and you've received $304,000 in cash. You haven't reinvested anything, and that's where the issue comes in column K. You look at your balance here, and we're down to $102,000. Yes, you've gained $304,000 in cash, but your portfolio is down $423,000, or that 80%. Let's look at our total returns and get a feel of what's happening here. Like I said, on some funds, we've seen that when you don't drip, you actually do better because you're taking that cash and you're keeping the value of that, and you're not feeling the NAV erosion killing that. With this, all three scenarios are in deep red. With the full drip, your portfolio balance is down $127,000, or negative 24%. With the 50% drip, you've lost $321,000 in portfolio balance value, but you gain $200,000 in cash. So your total loss is $122,000, or negative 23%. Again, not very productive over the course of a year. That is a very stinging type of return, especially since the underlying has been positive. It's not like the underlying had a horrible year and we're just kind of feeling that. You're seeing this in a year where the underlying did, like I said, about 17%, which for Tesla is very low. But again, it is a positive return, and you're seeing a 50% drip down 23%. And with the zero drip, yeah, you've pulled out $305,000 here, but you're down $423,000. So your total return is negative $118,000, or negative 22.5%. That is just where you're at. And this is 1 year. Will it turn around? Will it start seeing some positive growth with this? I don't feel positive about it. I'm not a big Tesla fan as it is. Definitely not a TSYY fan either. And this data to me just shows how detrimental this could be. If you own this, what has been your experience with it? What is your strategy? What are you doing? Share that in the comments below. Are you in the green? And what are you using as a strategy? And share that with the community, because what we're looking at here data-wise is not looking very good, and would love to hear other comments on what you think about TSYY, why you hold it, and what you're doing with it. Now, over here, for those that like these sheets and want a copy, we have two calculators. The first one is you can adjust the percentage. Instead of 100, 50, or zero drip, you can put in a percentage. So on this one, I'm just putting that we're going to drip 40%. And over here in column O, you'll see the amount that you're keeping as cash. The first column is adjustable, and it automatically updates everything else. And the yellow is where you would put the amount you want to drip, the percentage. And again, it doesn't matter what percentage we put, we are in the deep red on this one. Some of the other funds, you can get the sheets as well down at the Buy Me a Coffee link, and you'll see how those operate differently. But this fund, no matter where you're at, it has just been a tanking loss for everybody in what I've seen. Again, I'd love to hear your comments if you're in the green, what you've done and how you've gotten there. Now, the second calculator, what you have here is instead of putting a percentage, maybe you say, okay, I just need $1,000 period out of this. And it's, again, it started out per month, but then it goes per week. So we have $1,000 a week that we're taking out of this starting in June. And we just want to see how would we have fared if we're only taking out a small portion. Like, I just need to supplement my income. Again, maybe you don't have 500,000 that you're investing. Maybe you invest 50,000 and then you adjust these. You can adjust this amount and you can see how it operates. I would, again, not have all in on any fund. And we're just using this to keep the apples to apples comparison with all of our scenarios that we have on the playlist. Now, with $1,000, you're getting that each distribution. So you're reinvesting a healthy amount over here in column S. At the end of this period, you've reinvested $500,000, you've kept out $43,000, but your portfolio is down 28%. Again, I don't see any positive on this fund. Maybe I'm missing something. I'd be open to anybody's comments. Feel free to share. What are we missing if you're saying TSYY is a buy, it's a hold, it's a money-making machine? Please show us, share your strategy. But I am just doing what I always do on this channel with these. I am showing you the data. We're back testing it, and I'm just letting the data speak for itself. There you go. In my opinion, there's way too much red, and it is dropping way too fast. But you're going to have to make your own decisions. Even with the ones that I see that are green, and I say these are awesome, you have to determine what is right for you. Again, I appreciate your support here at the channel. Don't forget to hit that like and subscribe button. A lot of folks think they're subscribed and they're not. Go ahead and check that. Hit that bell to be notified of future videos when they're launched. And we will see you next time on Simply Money.